Back to another video for HarborFinancialOnline.com. Today I'm going to be talking about tax filing for married couples and the different ways you can file your return and some of the rules you have to follow. So let me get the video started and we'll walk through this together. So you need to determine your filing status at December 31st each year. That's the date that determines whether you're going to file married or single and how you're going to file. If you're married, you can file married jointly or married but separately. You have two options there, and I'm going to cover both of those options in detail with you guys and show you which way is going to benefit you more. Each situation is different, so we'll cover that area kind of in detail. According to the IRS, they consider you married if it's a legal union between a man and a woman, so they don't recognize same-sex marriages for tax purposes. You're considered married if you have a legal marriage and reside together. So you have to have the marriage certificate, legal document showing that you are married in order to, this is for tax, I'm talking about tax purposes, because when you file your return, you're either filing single or married. So this is all I'm talking about when I'm these specific laws and rules are specific to tax as I go through the video. You can be considered married by having a recognized common law marriage in your state, and if married abroad. If married abroad, you'll need a U.S. certificate, so make sure if you're married in another country you're still getting a U.S. certificate, because that's your legal documentation if you're filing your return married. You're going to need that because sometimes agencies will request a copy of that, because you get a lot of tax advantages by filing married. So make sure you have the actual certificate showing the legal documentation. The common law marriage, how this works, certain states recognize that for tax purposes, so the IRS will follow what your specific state allows. So there's not many states, so you're going to have to check out probably the website for what state you live in to see if they recognize common law marriage on the return, and you'll need supporting information of that. So make sure you keep, if you find that on the website, make sure you keep a copy of that just for your own records, because you might need that. You're considered married if living separate and not legally divorced. So even though you're living separate and you're not legally divorced, you're considered separate, and but legal is still married. You still have to file married on the tax return at December 31st. How this works is you could be married all the way up to December 20th, and then you get divorced the day after that. Well, when you file your return, because on December 31st you're now divorced, you're now single, that's how you have to file. So make sure you're not filing married on the return, even though you may have gotten divorced towards the end of the year. That's not a legal way to file. You can use our online tax estimator to see which way you're going to come out ahead when filing married, because again, you can file married jointly or married separate, and married jointly is normally going to give you more tax advantages, but in certain cases separate might be the way you want to go. Again, the most common way to file is married jointly. There's a lot more credits and deductions to filing this way. Both spouses are equally responsible for any errors on the return when filing this way. So that kind of leads into why some people will file married separate, because it takes away the legal recourse for what the other person might be reporting. So say your spouse owns a business, you may not want to be legally obligated to that business, any errors on the return. So that's something case by case you might want to determine on your own how you want to file. But most of the time you're going to get way more deductions and credits filing married jointly. And I'm going to take you to the actual form and show you where you put in how you're going to file. and show you our website, harborfinancialonline.com. You can use our online estimator here, and it'll allow you to put in which way you're going to file and show you what's going to be your taxes as a result of that and your refund. So I recommend checking that out if you can. So here's a link right here, and we have another link here. And on your normal 1040, this is what most of you are filing with the IRS. You may be filing a 1040 EZ. That's just a shortened version of this, but the same form. And here's your filing status. Single, married, filing jointly, married, filing separately, out of household, qualifying widower. Again, the most important thing I want you to get from this video is what you're at December 31st is going to determine if you're filing box 1 or box 2. And then you have to make a determination if you're married at December 31st, do you want to file married jointly, married separately? 80 to 90% of the time, married filing jointly is going to be an advantage to you. So separate is going to be a rare case. Look at the tax brackets. You're going to see a big difference between the two. What bracket it puts you in. You're going to pay a lot more tax married filing separate, but then you won't have the legal obligations of your spouse if they own a business and you don't want to get involved in that. So that's something to consider with this. And with our website here, you can prepare the return directly online, or you can use the calculator. So check that out if you get time. If you have any questions regarding regarding the deductions, credits, how to file, if you're unsure if married separate or jointly, which way is going to be better for you, send me an email. I'll help you out. Thank you for watching the videos. If you have any suggestions on future videos, just let me know and I'll put together a presentation. And check out our website, harborfinancialonline.com. You can prepare the return there or just do a quick calculation of your taxes. So thank you, and we'll see you later.